Hey everyone, this is Ryan with Stock Investing and Trading 101. Today is Friday, September 13th. The market nearly made new all-time highs yesterday. We're right about at all-time highs around the 301 to 302 price range on the SPY. One thing I want to mention before I get into the topic of this video is that it may be time to think about looking into hedging your portfolio or the possible hedges out there, and at least looking at them and thinking about them. I'm starting to hedge my portfolio with my usual go-to TVIX, but it may be the time and it may not be the time, but I just wanted to show everyone what I'm currently doing with my portfolio so I can adjust it for a possible correction. We have a lot of big news coming in the next couple of weeks with trade talks in person in 2 or 3 weeks, and also the Fed talk on Wednesday about a possible another interest rates cut. But the topic that we're going to be discussing and going into further today is how I can sell covered calls on my investments to, first of all, produce income and also reduce my average cost basis. Today's example, we're going to be using AT&T stock, ticker symbol T. As many of you know, AT&T has made a huge jump the past month, 10%, from about $36 to $38 and almost $39 at one point. Which is a very big move for a company and a stock like AT&T. I had a position around $36, which I sold and cashed out some profits, but I still wanted to hold the stock, so I ended up buying back in around $38.05 for 100 shares, a average total of $3,800 and $5 for my position. And so what I'm doing to reduce my cost basis, because this is a pretty high average cost. If we look at AT&T for the year, I'm pretty much buying at the yearly highs, and it's pretty high even for a 5-year chart. But what I'm doing to reduce my cost basis, because right now it's $38.05 per share, is selling covered calls against my stock. If any of you don't know what a covered call is, I have a video which I'll leave in the comment discussing exactly what a covered call is. But essentially you can sell calls against your positions that you have at least 100 shares of, and you can collect a premium. The only thing is that you are selling a contract to sell the shares for a particular prearranged strike price, so be aware that that could always get assigned and you may be forced to sell your shares. But what I did was I purchased them here on September 9th for $38.05 for 100 shares. And immediately what I did was I sold a covered call expiring at the end of the week with a $38 strike price for a $33 credit, or 33 cents per share. And so essentially what this means is that I collected the $33 credit, and I'm agreeing to sell my shares for $38 strike price, and plus he's paying the $33 credit. So pretty much the only reason or way this call would get assigned is if AT&T shares went above $38.33. Otherwise, it wouldn't be worth it for the person who bought this call to assign the call, because essentially they are paying $33 for the right to buy the shares for $38. So pretty much you can add the strike price of $38 with the credit received, so which would be 33 cents. So effectively what he's doing is buying my shares for $38.33. And once again, I purchased them for $38.05. So the worst case that could happen with this trade is that the shares go up in price and my call gets assigned, and I end up getting out of my AT&T position for a grand total of $38.33, and I make a $28 profit. But instead what happened was I sold the call for $33, and I was able to buy it back the next day for $23, making a net profit of $10, which I can then reduce from my cost basis of $38.05, bringing my new cost basis down to $37.95 per share, or $37.95 per share. And what I did after that was I sold another covered call position. This one I chose the $37.50 strike price, and I sold it for a $56 credit. Once again, you can add the strike price plus the credit received, which will give you effectively what I'm selling my shares for now is 38.06. So once again, I have a new average cost basis of $37.95, and I, worst case, just sold my shares for $38.06. So no matter what, I would still make a profit. But instead, what happened is AT&T share price went down along with my covered call price. I was able to buy it back at $39 for another $17 profit. I just bought it back here today. So all of these trades were only within a day or two apart, and I was able to make, what was this, $27 now total, because I made the 10 before and the 17 profit here, reducing my overall cost basis to about $27.75 or somewhere in that area. So as you can see, I've already been able to reduce my cost basis from above $38, which is pretty much at all-time highs or yearly highs, and now I'm able to get it to about $37.75 and continuing to bring my cost basis down. So here, once again, I opened a new covered call position not too long ago, a $37.50 strike price for a 62-cent credit per share. This one expires next Friday. So once again, worst case is that I sell my shares for $38.12. Because if you add these two together, the $37.50 plus the 62 cents, you get $38.12. And we're going to have to see how this plays out next week, because I'm not going to probably do any more trades with this today. But hopefully I'll be able to buy it back cheaper or have it expire worthless. But that's just an example, a live example of what I wanted to show you guys, how you can do this to lower your cost basis. And it is really a big perk to be able to do this, because it kind of protects your position. If the stock goes way down, instead of losing a bunch of money, your call will expire worthless and you'll collect the full credit, which will kind of offset some of those losses. So I don't want to get too far into other topics today, but that's what I wanted to show you guys. Selling covered calls is a very interesting way to reduce your risk on your positions as well as increase your income. I love covered calls. They are usually low risk if you understand the basics behind what you're selling exactly, and knowing that your calls could easily get assigned. But yeah, thanks for watching the video. If you have any questions about covered calls or anything, feel free to let me know. I'm going to be uploading another video either today or this weekend about going further into hedging my portfolio and why I think now is a good time to hedge. As always, this isn't financial advice. This is just for entertainment purposes. Always make your own decisions when trading or entering any positions in the stock market. Thanks for watching. Please subscribe to the channel, and we'll talk to you guys later.